This is a straightforward video on how to trade psychological levels with Fibonacci retracement tool. So this is simple, and I will show you guys how you can trade psychological levels with your Fibonacci retracement tool. This alone, you can combine them and use as your strategy that you can use to trade the market, guys. So this is Simplified Forex Classroom, where we simplify the complicated. We break down hardcore tips in Forex and then helps you to trade the market easily. So first off, I am going to draw the psychological levels on the screen for you guys to know. We all know what psychological levels are. They are round-up numbers, okay? So let's come here, let me show you. You can see psychological levels refers to, now you see here, psychological levels refers to significant price levels in financial market that traders perceive as important due to their round-up numbers. So we're talking about round-up numbers, that is 00 or 50. You can see it's here. So the idea is people want to buy products in a run-up number. Nobody want to buy a car which is $5,001. You can see everybody wants to buy something running up to the nearest number. So that is where we say these run-up numbers are areas where price respect a lot. So we're gonna be picking those areas as our psychological level. So I'll be plotting this one here as my first psychological level, which is going to be 1 point. It's going to be 1 point. So we're gonna change this one 1.31800. Going to be the first psychological level, and we're going to be adding 50 to it. Okay, so you can see this, we have this one also here, 1.32500. so I'll mark this area as wall because it's psychological level 500, and then you can see from here to here, as you can see, price is behaving in between, or price is reacting in between the psychological levels. So the next psychological level is going to be 1.3300. So let's go 1.3300. So I'll just forward this video, put in the psychological levels there, and then we come back to. So guys, let me do this one real quick, and then we come back again. The next one is 400. You can see. So 400, and then the next one is going to be 450. Let me take this one up. Next one is going to be 450. You can see, and then change this one 450. The next one is going to be 500, 1.3500. The next one is going to be 1.3550. Let me change this one. So I will just do for a short one. You can do it on all your screen, but just have to make sure it's decent. So let's come here to the down here. We have 1.31500. Let me put this one here. 500. Let me put this one also here. 500. Okay, then we go down to 1.3100. So that is it. 1.3100. That is it, guys. Yes. And then we have 1.200. We're going to be somewhere here. 1.200. We're going to be somewhere here. Okay, so this is it. All right, so this is it, and this one is okay. Perfect. All right, so guys, this is the psychological levels we have marked out on our chart. So let me bring the last one here. 1.3500. 3500. Okay, so now you can see. Now we did it in the 4-hour time frame. That is on the 4-hour time frame, but when you do it on the big picture, when you scale down to the smaller picture, you're going to see that price will be moving perfectly through the zones, that is through the psychological levels. So now let's go to 1 hour. Now let's see how price is behaving in between the levels. Now you can see how price is behaving in between the levels. You can see we have this level here, that is 1.32500. Price respected, still dropping. We have this area too as well, 1.3200. Price respected, push up. So now you can see when you scale to the bigger picture too, you can see price moving perfectly. Let's come here. You see how price is behaving also in the zone, that is on the psychological level. There's reactions on psychological level. That is anywhere price reacts on the psychological levels, there's actually a turnaround, or there's actually multiple rejection. You can see this area to price rejected, came to this area, rejected, push up, came here, there's a push down. Okay, so how do you trade this one with your Fibonacci retracement? So guys, I have a video on the Fibonacci retracement tool on the channel already. You can go check that one out. And this is just a simple, glance through. Let's see. So this is the Fibonacci retracement tool. Let me deepen it. You can see it is used to measure any pullbacks in a market. So let's say this is price, push up, push down, and then push up. Okay. So the Fibonacci retracement tool is used to measure at which rate will this pullback come to before another impulsive move to the outside. So I have a video which I was detailing everything, going into advance. Everything that you are seeing here. This is the negative 62%, and this is the negative 27%. This is the 00%. We have the 61.8%. We have the 50%. Okay, so I have a video showing you guys the setting and everything. Go check that one out. I also put that video in the description for you guys. So what you need to do now, let me take this one, everything now from here, and let's go to what this video is about. So now let's say you want to pick a trade. What you need to do is where price started the move from, that is, in this case, it was here. Okay, so that was it, and then you put your Fibonacci retracement there. I hope you guys know how to use it. Draw it to where price got to before the retracement. In this case, price got here. You can see, I hope this is not messy. All right, so the push started from here. You can see there was a retracement down to this area before they push to the upside. So because we are looking for sell, you draw it to this zone. That is this zone. That was where price got to before the retracement. And we are looking for the trade entry around the 61% or the 50% or the 38.2%. And you can see this one, price pushed all the way to the 61% before the retracement. So you can see how price did push all the way to the 61% before the retracement to the downside, guys. Perfect, right here. And now you can see this area too. If you want to catch trade from here, now we are in a downtrend. Okay, we are in a downtrend. So this is Fibonacci retracement, and this area too, the same thing. You can see there was a psychological level there before the drop. You see. So now let me show you. Let's say now this area here, let's see, this is the price movement, push down, push up, push down. Okay, so let's say this is the price movement. You need to take your Fibonacci, mark from where price started the push to where the retracement go to, then you extend. So this was where the impulsive move started, this area. Price got here before the retracement to the upside. Okay, so this is point A, this is point A, this area here become point B, and now this area is point C, and now you are targeting point D. Okay, so that is it. So you move your Fibonacci from where price started, that's point A, to point B, and then you look for your entry, that is the C. So you are looking for C. Either C will come to the 50% or the 38% or the 61. That's what you're looking for. So if it comes to 50%, then you need to make sure that there is actually psychological level also in that region before that will be your trade entry. Okay, psychological level around that place before your entry. And if price comes all the way to the 61% for the trade entry, then you need to make sure that there's actually psychological level which is around that place to support price, because psychological levels also act as support and resistance. That is dynamic support, dynamic resistance. Okay, so you need to make sure that there's actually psychological levels around that place before you go in for your trade entry. All right, and the same thing happened around that place that I just showed you guys. This is point A, this whole area becomes point B, and now this area becomes point C, and your target will be point D. That is why you take a Fibonacci, put it at point A, extend to point B, and then you see that price will trace to the 61 and then target this one. The same area here, let's go to 15 minutes and let's see what's up with price. Now 15 minutes to the same thing. Let's say I want to find trade entry around this place. This is what price is doing. This is a Fibonacci retracement here. Price started from here, so this is point A. Right here we have point B around this place. Now price is retracing up. Take my Fibonacci, point A, extend to point B, this area here. Okay, so price extend to this area. Now you are looking for entry around this area. Is price going to come to 61, 50 or the 38? If price comes all the way to this area, and then I'll look to take my entry from here to the upside, because there is also a psychological level around that place, which is the 1.38, sorry, which is the 1.32 supporting price to the upside. So this will be your trade entry like this to the upside, guys. So let's see, that's what I'm talking about. Perfect. You can backtest this one, you're going to see that it works all the time. You can see the same thing happen here. Price push from here, point A. Let me show you. Price push from point A, this is point B, come to point C. So you take a Fibonacci retracement point A to point B, you're gonna see that price retrace all the way to the 50% value there. You can see right here, and there's also a psychological level around the place. Perfect sell to the downside, you can see. So guys, you can backtest this one, and you're gonna see that psychological levels and Fibonacci retracement 2 works every time. You see the same thing happen here when price push from point A. Take a Fibonacci retracement, put it there, extend to point B. You can see. So this is point A. This area is point A. This area point A. Now we have point B around here. You have price retrace to point C. This area, that is the 61.8%. And now you can see the psychological level also there. And that will be your trade entry. Price went all the way. The target is negative 61. The TP1 is negative 27, and TP2 is negative 62. TP1 hit, also TP2 hit right here, guys. So this is it. Subscribe to the channel. Comment if you have any question, guys. I'll see you guys in the next video.